Herald van der Linde, Head of Asia Equity Strategy at HSBC, is with us. Herald, great to have you on. Very, very newsy morning. So I'll start with the core question here. You know, in India, we know that we are not an export-focused economy. As a percentage of GDP, US exports are just 2%. But the concern that's building up here is about FPI flows into the market here, overall FDI flows. Will foreigners shy away from India in the near term because of this whole tariff issue?
Yeah, I think that the tariffs have got a couple of implications that go on and beyond just putting prices up. It creates uncertainty. So it means that people find it difficult to make investment decisions. If you, for example, would invest in the US, do you want a factory in Mexico now, or do you want in the US? If you go to Mexico, it's cheaper labor, but you might get tariffs. If you go to the US, it's more expensive. But if you go there and the tariffs goes down, then you're in the wrong place. Such it is in two other countries, right? Should you be investing in India now? Would you get tariffs at some point in time? So everybody is sitting back and waiting for things to settle. And unfortunately, things haven't settled yet. So I think investment trends around the globe probably will start to come down in addition to trade. So that's a difficulty that I think not only India faces.
No, but specifically on FPI flows coming to the equity market, Herald, what is your sense? Because India was anyway not getting too much flows. July, we started seeing outflows. Now, will this tariff issue become an additional overhang? Or will investors look through this as they look at Indian equities?
No, I think it will be a little bit of an overhang because they have excuses to look at other markets which look really interesting at the moment. And that is really North Asia, Korea and Taiwan, even more so than China. So far, the Chinese market is done pretty okay, despite the tariffs and these sort of things. Like India is a domestic-oriented market. But the excitement for the moment lies in Korea because of corporate governance changes taking place there. But also, they make particular what are called high-density memory chips that you use in AI. And it's the same in Taiwan, where they make custom-made chips for NVIDIA that are being used in AI. So there's this feeling that there's growth in North Asia. In addition to that, we got global defense spending that benefits companies in Korea again as well. So there's a lot of attention that goes there, and that needs to be funded. And India is one of these markets where people say, well, you know, a little bit expensive, growth is coming down, they get tariffed anyway. So it's a sort of an excuse to use that and reallocate money elsewhere.
All right. Hi, Harold. Good to see you. But, you have a neutral call on India. And as you said, valuations has been one of the problems. But now we have done some bit on the fiscal side. There's monetary push as well that's taking place. And the Q1 earnings, in fact, are not as bad as what the street was working with. There is hope that we see a recovery in the second half of the year. If that's the case, would you be looking at changing this stance? We've already pulled back a little bit from the recent peak. We're down 1,000 points in the last 1 month or so. And from the peak as well, we have seen a bit of a correction. At what level do you think you will start getting back into India?
Yeah, I think actually a little bit over a year ago, we had 10 worries about India. It was expensive and these sort of things. Everybody was overweight already. Probably 8 of these 10 worries are now out of the window. Okay. Valuations have come lower, earnings expectation lower. People have sold out and reduced their weightings in India. So all of that is actually on the margin positive. What we now need to see is that regionally starts to fit in as well. And then I would say things, the stars are really aligning for India. And we might not, to be honest, too far away from that, because as I just spoke about Korea and Taiwan, to be honest, those stories have been rallying for some time now. And at some point in time, we'll probably start to fizzle out as well. AI is really exciting, but you can't have stocks just go up and up and up for a prolonged period in time. Because then they run into valuations issues. Well, were that to be the case, then I think you could actually see that money that I just said was left India to go to Korea and Taiwan might actually start to return back into India. And that might well be something that happens in the second half of this year. What we need to see is that we get more confidence on growth in India in the first place. Now, we're in the midst of earnings season, and some of that confidence is starting to come through. But so give it a bit of time.
Was a interesting bunch of points you make, Harold. You know, the other point, I was just thinking as you were talking, Harold, The big global theme, right? I mean, the one singular theme globally for the last 1 year, 1.5 years is, as you just said, AI, right? Bulk of the new money has gone into, has tried to find ideas around it. I mean, either direct plays, big global tech giants, supplies into it, power, whatever, right? I mean, that's been the big one. And that theme kind of is absent in India, right? Except maybe, I mean, if you want to play it through the power side, there are no plays, I mean, actually. And that could perhaps, at the margin, you think, Harold, explain why, I mean, FII selling this year has been about $10 billion. So you think that's partly a factor?
Yeah, that's partially affected. I mean, this is why we see this rotation into Korea and Taiwan, because they're so very well exposed to this particular team. They are the hardware producers to keep AI running, the chip makers. And you see, if you go deeper in these markets, there are other companies that benefit from this as well. You got companies, for example, for AI, you need large data sets. So you have companies that organize servers and these sort of things. Even in Malaysia, there's a company that is involved with that and has also performed very well. But you are right. That is very much a Korean-Taiwan story. China has its own DeepSeek and its own companies there as well. India and ASEAN are much less exposed to this. They don't really make this particular product, so or not really into that particular food chain. So that means that at the moment that's not really good, but that can change, right? Because at some point in time, it's not going to be AI making it. It's about how companies will implement it, how it makes them become more productive, how they maybe can redistribute their product, rebrand it, reposition it. That's why Indian companies, of course, can benefit as well.
Yeah, it's quite interesting that today morning, most of the major markets, I think even Taiwan, none of the markets were down big time, despite the 100% tariff on semiconductor imports. But then that's just how it is. Just finally, quickly, Harold, you said things are becoming a little better for India, including earnings. Most people here say that it'll be 9 to 10% earnings growth this year. I mean, tell us what you're thinking, and whether 10% earnings growth will be enough to get foreign interest back.
Yes, I suspect it. Actually, at the beginning of the year, we made a rough guess, and we thought, earnings growth in India probably is going to go to 8 to 10%. At that time, it was 18. So the growth expectations have come down to where we start to feel like this is probably reasonable. What we now need to see signs that actually that is happening, that it doesn't fall further to 6, 5, 4, 3, 2, 1 or something like that. So if we get some sense of stabilization at, say, 9%, 10%, that is good, because then we can price off that. And then, as I said, we've seen lower valuations already. People have already sold to India. If you see some tiredness in the AI story and or China, then suddenly India might look okay again. So we're working into that direction, it seems, but we're not there yet.
Relative. Life and markets tend to be always relative. All right, Harold, thank you very much for joining in. Great perspective. Good speaking with you this morning. You have a great day, and we'll connect again soon.